All right, let's talk a little bit more about the mood of the markets with 30 minutes to go on this Wednesday morning. Dec Mullarkey joining us now, Managing Director at SLC Management. Dec, it's nice to see you. You know, we started the week with what felt like an appetite to take on some risk, even though we still have this tariff uncertainty. This morning, I would say investors are back to their cautious ways. What's your sense of what's going through their minds right now?
Yeah, I mean, that's a great way to, first of all, John, great to be with you, great to connect. Yeah, that's a great way to describe it, that when we came into Monday, there was this feeling that these would be targeted tariffs, and that really did kind of spark a little bit of, recovery and a good mood. But then, the chatter continued with, okay, reciprocal was used many, many times, and that's where markets are right now. They're definitely uncertain, and they're kind of sitting back and saying, okay, what's going to happen next Wednesday? And at this point, that's where we're at. Now, I would say that markets aren't completely risk off by any means. They're just very cautious. So they're kind of hiding out in more defensive sectors. And that's kind of been evident all year that they've stayed in equities, but they've tilted towards, say, the undervalued areas, and that's why other parts of the world have benefited. But it is a wait and see at this point. It's just so uncertain. And, the copper tariff, when that came along as well, again, it was enough to spike prices. And, that's where we are right now, is just, again, just wait it out and see what comes next Wednesday.
Right. So that copper news being that U.S. tariffs on copper imports could be implemented within several weeks, which would be months earlier than the deadline for a decision. You were referencing next Wednesday. I just want to sort of clarify for the audience, that's this so-called Liberation Day that has been used as this big sort of flagpole event for be ready for the tariffs to hit. Now, when we started to see the initial sell-off in the stock market, I heard some pundits ultimately saying, Dec, that the market had not factored this potential in. They thought we might come close to a trade war, but it wouldn't happen, and then that had to be reflected in the markets. If you're trying to determine at this point, since we did see some selling off the peak levels for the stock market, how much has been priced in, do you care to take a guess on that?
There's been some, but it's a tough one, John. I mean, markets, you're absolutely right. They had this approach and feel that they would price it as it came. And, as things show up, they price it in. And you would see what has, so, like the sell-off of down 10, there was support and comeback. That's probably half the way there if we really get some, shocks next week and that it is more expansive than expected. So I think, down 20 would probably be a floor, and then it would maybe settle and try to come back from there. So I would say, in terms of the bad news cycle, maybe half of it has been priced in right now. So that's a kind of, again, rough assessment of where we're at. And again, the tech, oddly enough, is getting a little bit of a bid because people feel that that's still, has been gotten hammered a little. So you do see that still that appetite to buy on the dip, and that's why you saw a sell-off. You probably would see investors jump back in and provide support at maybe down 20%. Again, not from here, maybe down another 10 because we're basically have sold off a bit. But so that's kind of my broad assessment on that.
I was just trying to take a quick look within the S&P 500 since the peak level for that index, which people might know took basically a 10% tumble off the highs, which then creates a headline that we've seen a correction. I'm just looking at stocks since that peak that have actually been higher. And you find an interesting mix of companies, including Berkshire Hathaway, Warren Buffett's business, navigating through the storm, it would seem. I see some companies that might be sort of considered like consumer staples that are doing okay, maybe some utilities in the mix there as well. In terms of the money flow, if people aren't exiting the stock market, so to speak, how is the pool being redistributed, if you will?
Yeah, no, it has been this flight to safety. So just as you describe, a lot of those defensive sectors, like financials, healthcare, utilities, energy, they have gotten a bid. And then some of it has gone internationally. So, but that reshuffling is happening within the S&P. And it's kind of interesting, you pick out, your point's a good one. And you look at say, the the factors that have performed this year. Like momentum, is usually the top performer just because of tech. That hasn't been so this year. It's been low volatility and high dividends. So again, it points to what investors are looking for, kind of certainty around cash flow, and that's actually how the position. And even if you're to look within tech, like say year to date, like Nvidia is down 10%, but Intel is up 20%. Now, Intel was a beat up name. So that's again where investors are kind of looking for value and saying, oh, these valuations, maybe we stay away from those that are at higher levels. So that is what's happening. It's not, no one's running for the hills. They're just repositioning. And you see the same thing actually happening in corporate credit. Within high yield, people are moving up in the stack. Same thing kind of investment grades. So again, caution, repositioning, but not abandoning risk. That's where we are right now.
We're almost out of time, but could you leave our audience with sort of an investing idea, like what you're doing amidst all this, what your advice might be?
Well, the advice generally is that markets still, the outlook is still generally pretty good for markets. And again, there's a recession risk and all of that. But I would say stay invested, and if you feel like you need to do something, just tilt to more of those type of defensive stocks, the ones we kind of mentioned. I still think that's a good bet. And honestly, the TSX has performed very well this year. They are much more of a value market, and I think it gets overlooked how well they performed last year versus the S&P. So the TSX is definitely a good value play, I think.
I'm glad you brought it up. Positive territory this year. Dec, appreciate your time. Dec